Hello traders, Gary Wagner here, approximately 11:40 in Honolulu, 5:40 in New York. It is Thursday, the 28th day of June, 2012, and this is the daily report for gold and silver. Utter washout in the precious metals markets as we watch gold close substantially lower, somewhat off the lows of the day, but still down $22 on the day, $15.53, $15.52, bid-ask spread in cash. The low, $46.50, and the high was $78.70. Silver off double digits, down 2.3%, off 62 cents on the day, $26.42 with a low of $26.04 and a high of $27.18. To give you a visual indication of the kind of action we have seen recently in the gold market, I've put up a very, very short-term chart. This is a 60-minute straight candlestick chart, and as you can see, it pretty much gives us the activity from about the first week in June till present, our last week of June. As you can see, in terms of the month activity, we did have a high of about 1635, just shy of that. And what you can see is there can be no doubt, but there's some very, very strong resistance in this area. The market really couldn't make it past or above this price point. We can see the effects that the Federal Reserve meetings had. We can see the effects that the Supreme Court ruling had on the health care bill. And what is noteworthy, of course, is the fact that we have closed on a new low and really broken above what I consider to be a pretty strong level of support. Not that strong, apparently, at around 1560. It was my belief that that area should, in fact, hold. It, in fact, did not. You can see as we're trading right now at 1551, call it 1552, bid-ask spread 1553. Now, traders, to give you an idea of why this particular area technically, in my opinion, is so important, what we really need to look at is a longer term view, daily chart, continuous contract, Heikin Ashi format. It is of COMEX Gold. When we look at, this is our low price back at around just above $1,300, February 2011, $1,300, climbs $600 higher, make this record top at 1920 on the cash. On the continuous contract, it came in at 1936, roughly in that area. When we take a look at that particular move, we are plotting basically two different Fibonacci retracement levels. And of particular note, of course, is the 38% retracement level. That takes the market to 1560. That is really where that number has come from, is that in terms of a retracement itself, that particular mark is a 38% retracement of a pretty sizable move, a $600 move. So that when we consider the fact that as this market did come down and correct at various points, it touched upon this area, but was always able to move back above it. And as you can see on this last move down, we then went and really hit a new low. This is that triple bottom that we were looking at. But the question is, will this triple bottom actually hold? Because now what we're looking at is a market that is just under this 1560 area. Now, traders, I have basically taken away the indicator, the Heikin Ashi, and we're looking at straight candlestick charts. The reason for doing that this morning is it will allow us to see really the kind of a sizable move that we saw in the market when we take a look at this day's activity and the fact that we did close really close to the lows of the day off of these very, very low points, that 1531, and that really to me is going to be a line in the sand. I have converted the daily to a weekly chart back to Heikin Ashi. And the reason for that is we are clearly in a indecisive pattern within the trading style of gold. When we take a look at this sizable uptrend, you get an abundance, almost straight green candles, except for the one period when the market consolidated just below 1560 and when 1560 was resistance as opposed to support. We can also take a look at this one area, 1560. And you can see that although we have lows in this area, we don't have on a Henkin Ashi chart any closes in this area. However, the market is trading at 1552. It is below that area. But once again, my sentiment right now is that absolutely we are going to have to determine if this particular set of lows that we have seen roughly in the 1530 area are going to hold. Quite obviously, the 1560 did not hold. And as you can see, 1560 is a very, very strong number in terms of gold prices mathematically when we consider the Fibonacci retracement level of 38%. Traders, no doubt, silver under consistent and continuous pressure over the last few trading days. Again, daily chart, continuous contract, COMEX silver. We have been talking about whether or not silver can find support 2650, let's call it. We did hit a low below that in the cash market just at about 26, and that's the area that I honestly believed we could see silver go to. We are there. We have no technical evidence whatsoever that this will be a bottom, because to get that technical evidence, we typically need to see what I call a V. In other words, as a market comes down, you get this V-shaped bottom in which at least for the first part of it, you will see it come off of those lows. Really, what we have seen in this marketplace is some very, very solid resistance right here. And as this market traded lower below $30, really, this is the only area in which we've seen any kind of support. It does match to this area here in terms of the beginning of the year. This is January 2012. And of course, this major drop that we witnessed when we saw silver come off of its secondary, and I say secondary because it has hit $50 once before, came off of that high, traded sideways for a little while, made a lower high here, and then we had this tremendous drop over, I believe it was 4 or 5 trading days, in which we saw almost 25% in value erode literally overnight or over the week. Let's see if this one area holds. Until we get any kind of technical confirmation of that, we are going to sit on the sidelines. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.